India is one of the largest consumer of gold and there are tons of gold stored in the lockers without having any productivity. Especially in the rural part of the country, people either do not have a good credit history or do not have anything for collateral to pledge as security against the loan. That's where gold loan has emerged as a great option to raise money. And one company that is among the leader in the gold loan business is Muthoot Finance. Hey everyone, my name is Sahil and this is my Personal Finance Academy. 10 years ago, Muthoot Finance was trading at levels of around 125 to 130 and then it touched a high of around 1700 last year in November 21, generating nearly 13 times return within 10 years. However, since then, Muthoot Finance share price has fallen around 40% to current levels of 1040. The question is why? Why Muthoot Finance share is falling? And is it worth holding or accumulating the share? Or should you exit from it? We'll discuss it in this video. We'll first start with a brief overview of the company profile and then we'll cover the reason for the fall. But remember, this video is only for educational purpose. Alright, let's get started. Muthoot Finance was established in 1939, so it is more than 80-year-old company. It is the flagship company of Muthoot Group, which has a family legacy of nearly 800 years. Muthoot Group was established in 1887 in a remote village of Kosancheri in Kerala, and today the group has a diversified business in 20 verticals including gold loan, vehicle loan, housing finance, wealth management, healthcare, education, leisure and hospitality, power generation, housing and infra, media, IT and so on. Although Muthoot Finance was already a well-established name in the South India, this group has grown multifold times to become India's largest gold loan NBFC under the leadership of late MG George Muthoot. He became the MD of Muthoot Group in 1979 and took over as chairman in 1993. Although he died in 2021 and later his brother George Jacob Muthoot took over as group chairman. Now if we specifically talk about Muthoot Finance, it is a diversified NBFC with major business in gold loan financing. Although it has also subsidiaries in various other segments including Muthoot Homefin Limited, Belstar Microfinance, Muthoot Money, Muthoot Insurance Broking, Muthoot AMC, etc. I don't want to get into the detail of each business. Here, I want to specifically discuss two key strengths and two weaknesses of Muthoot Finance. And then we'll look at the reason why the share price is falling. So first strength of Muthoot Finance is strong foothold in gold loan space. Muthoot Finance is India's largest gold loan focused NBFC with a total portfolio of 63,443 crore rupees as on Q1 of FY23. Out of this, gold loan constitute a total portfolio of around 56,689 crore, which is nearly 90% of loan portfolio of the company. Company has an extensive network of 4,600 plus branches. Moreover, the gold loan business is also highly profitable with very low risk. Try to understand this. Gold as an asset class always appreciate over time. And when the gold loan companies give the loan to the customer, they keep the gold as collateral. Now gold is highly liquid, which means in case of default, NBFCs can easily sell the gold to compensate for the default. And interestingly, there is something called LTV, that is loan to value. So LTV is the ratio of the loan amount to the gold being pledged. Currently, the LTV is 75%. It means a customer can get only 75% of the loan on the total value of gold being pledged as per the latest gold price. For example, let's say you want a loan of 75,000 rupee, then in that case, you have to pledge gold worth 1 lakh rupee. So you can only get gold loan worth 75% of its gold value. This makes the gold loan business very safe. Then second strength is strong financial profile. It is very important to understand the financial profile of an NBFC company. NBFC do not have an option to provide saving account or current account like banks. Hence, they raise capital either via offering fixed deposit or via raising capital from the market. Now, the financial profile of an NBFC is very important because that decides the cost of borrowing for the company. If the financial profile is weak, the cost of borrowing would be high. Obviously, company would have to raise money by paying high interest. However, if the financial profile of the company is strong, company would have very low cost of borrowing. Then in that case, it can raise money at lower interest rate. And Muthoot Finance has a very strong financial profile with one of the highest profitability in the industry. As a result, it can raise capital at low cost. That further improves the profitability. Of course, the established track record of the company for many decades also add weightage to the company. Now, as far as weakness is concerned, its first weakness is high concentration in South India. Muthoot Finance operations have high degree of geographical concentration where South India accounts for around 50% of companies' AUM and 60% of the branches as on Q1 of FY23. That makes Muthoot Finance vulnerable to economic, social and political disruptions in the region. Then its second weakness is very low market share in non-gold loan business. Currently, 90% of AUM of company is with gold loan and a very small portion is with non-gold business. In fact, as per latest data, company reported a profit of 825 crore, out of which 802 crore is from gold loan business. That's 97.2% of total company's profit. Although Muthoot Finance has started to diversify its product suite across housing finance, microfinance, vehicle finance and a few other segments. However, none of these businesses command good market share. Now let us try to understand the reason for fall in Muthoot Finance share price. If you look at the potential in gold loan business, there is still a huge growth potential. There are still many people in rural part of the country who need loan for business. But majority of them either do not have a good credit history or do not have anything for collateral to pledge a security against the loan. Hence, most of the loan applications get rejected or take a lot of time before approval. That's where Muthoot Finance is bridging this gap by providing business loans against gold jewelry as collateral. Then the question is, why share price is falling? The reason is simple. Intense competition in gold loan space. Today, gold loan NBFCs are facing crazy competition from both public and private sector banks. Almost all public and private sector banks have introduced gold loan and that too at very low interest rates as compared to NBFCs like Muthoot Finance. While on one side, Muthoot Finance is giving gold loan at around 12% interest, PSUs are offering gold loan at 7 to 8% interest rate. How do you compete at such low interest with PSUs? Not only this, even the new age fintech companies like BharatPe have started giving gold loan at as low as 4.9% interest rate. As a result, all these private and public banks as well as new age fintech companies are eating the market share of NBFCs like Muthoot Finance. And that is clearly visible on the growth in gold loan segment. Muthoot Finance gold loan portfolio has shrunk by 2% in Q1 of FY23 as compared to last quarter. And its profitability has fallen 16% year on year. This growth has slowed down for last few quarters, which has impacted the profitability of the company and eventually resulted in fall in share price. Although I saw a very interesting pattern in the shareholding of the company. DIIs are continuously buying Muthoot Finance since last 6 quarters. It was 6.6% in March 21, then increased to 7.7%, 8.26, 8.48, 9.67 and currently at 10.48%. FIs have been the net seller and promoter holding is constant. Now the question is, if you are an existing shareholder of Muthoot Finance, then what should you do? See, gold loan industry in India is still highly fragmented and organized players with large network, sophisticated inventory management and well-crafted advertising campaign would continue to gain the market share. However, everything would boil down to the growth of the company on quarter basis. The intense competition has already dented the growth of Muthoot Finance, but the key question would be, can Muthoot Finance come out of this slow growth phase? Because if the competition eats the share, it would further impact the profitability and share price. Moreover, the growth of the company would also depend upon the increasing exposure in non-gold business. Overall, I still have faith in the company leadership and the future prospect in gold loan and other loan business. At current levels, Muthoot Finance is now trading at P ratio of 10.9 and PB ratio of 2.2. So I believe that if you are a long-term investor and already invested in the company, then you can hold it. But considering the intense competition, it is better not to have high exposure in the company because you never know how much can the competition impact the business of Muthoot Finance. Personally, I would like to avoid such highly competitive space. So this is it for this video. Now tell me in the comment, what is your take on the company? Is it worth holding? I hope you'll find the video useful. I'll see you in the next video. Till then, take care.